What is going on, everyone? Welcome back to another live session. Before I start, I'm gonna send out a link for more people to join. And as always, I'm going to send the link in our free Telegram first. So if you haven't joined, make sure to do so. There's a lot of free information in that Telegram channel, and obviously even more on our website. So I'm just gonna take a couple of minutes to send out a quick message, and then we're gonna proceed with the charts. In the meantime, if you guys have any trading setups you want to share with us, or if you want to send me a message, you can find all the links in the description below this stream. Or if you're not watching this live, then just check out the description of this video. There's a lot of links that you can check out to get familiar with what we do and how we can help you. Obviously, if you want to start trading either part-time or full-time. All right, so message sent. All right, I'm gonna drop a quick post on Twitter also. Get a lot of people from Twitter as well, messaging us pretty much every other day, asking questions about the videos, about our algo, the VTS, as well as just simple price action questions. And obviously, we're always ready to help. So that's why right now, take advantage of this live session. All right. If you currently have any questions, just send a message in the chat box. And this is why I do those live sessions. So you guys can ask your questions, and hopefully I can answer and give you my 2 cents, and potentially help you on your journey of becoming a profitable trader. I think this is very important. When I was first starting out, I was always trying to find, either a course, a mentorship program, and I was also watching live sessions just to kind of understand how other people trade, and other points of views of the market and of how to analyze price action. And it's kind of my giving back to the community right now, doing those live sessions for you guys each and every week, right? Well, I skipped last week because I was traveling, not last week, but the week before that because I was traveling, but I am back. So we're going to be doing those live sessions again every Tuesday and every Thursday. Sometimes I switch them up, and instead of a London session, I may do a US session. And to be honest, I've noticed I think there's more people attending when we do the US market sessions. But let me know in the comment section or here in the chat box of the stream. Let me know what is better for you. I mean, I assume if you are watching now, then this is a convenient hour for you. But if you can also attend the US session, let me know, because I feel like there are more people for a late session. Really depends on where you are located, in which time zone. Because we get people from everywhere. I look at the audience of our YouTube channel, and I can see that there's people from the US, and there's loads of people from Europe as well. So I guess the hours will differ, but let me know what's better for you. And if you actually find value in those sessions as well, You know, sometimes we don't get a lot of engagement. So this is what I'm trying to do, just to build up some engagement throughout the live sessions so they can be more valuable for others that are watching later. You know, I may have 10 people watching live, but then if you know, if you check out um, my previous streams, you will see that I get, you know, more views than I actually have during the live session. So that means people are coming back to watch those live sessions whenever it's convenient for them, even if they're not live. But obviously, you know, I leave them up on the channel so people can go back and watch them if they want to. Because what we do is essentially we not only analyze live market conditions and, you know, look for setups and so on, but I always try to add even more value, telling you my own experience with trading and, you know, how I would proceed in different situations. So all of that, it's not like a structured course, but you know, if you can stay for an hour, because that's how long the sessions are, if you can stay for an hour and, you know, be disciplined enough to go through every session every Tuesday and every Thursday, I can assure you your trading is going to get better, especially if you are in the beginning of your journey. Now, today is very important day, I would say, because we've got European Central Bank's interest rate decision, and not long after that, actually about 30 minutes after that, we get the press conference that comes with it. So I feel like we may see some movement across the market. I'm really not expecting anything major. We'll see how it goes. Overall, we are looking at a bullish trend, right? This is what we have. And we also have our next target levels. Again, not just the previous high, slightly above 1.18, around 1.1820, but also I do have even more targets above that. So the one that I see right now is around 1.1870, and then eventually 1.1890, 95, or, you know, pretty much around 1.19. So if, let's say, we have a bullish price action with the help of the news today, then we're going to keep looking for buying opportunities. Now, the question is, what will happen if price comes up here and it rejects that level? So it gives us one of those bearish candles, okay? What will happen then? Well, since I'm only looking to buy in this uptrend, I'm not going to buy literally at the highest price, and I'm also not going to buy when I have such a strong signal, a rejection of previous major high. Now, if I get a rejection like this, in my opinion, that means we're probably going to see some pullback, maybe even a deeper pullback, okay? However, I'm not going to be looking for sell positions within this move, even though I'm expecting that we may have a bearish move if we get one of those rejection signals after the news, okay? Why? Because my strategy includes only trading within the trend. So when price is not moving in the trend direction, but instead of that against the main trend direction, that means I just have to wait. I've said it many times. It's as simple as that. The thing is that not a lot of people can actually follow that rule, because sometimes you may have to wait for a correction. You may have to wait for a pullback to end for several days, maybe even a couple of weeks, you know, and the question is, can you do that? Now, when you first start trading and you don't have a lot of experience, everybody thinks that as soon as you open up the chart, there's going to be a trade somewhere, right? So if you're watching, let's say 3 4 instruments, or maybe 2 3 instruments, and you don't have any good setups on those instruments, you may, you know, start opening up new charts, new instruments that you haven't traded before, and this is a major mistake. Because the thing is, if you're looking to find a trade, you are going to find one. You're going to have many excuses and reasons, basically reasons, I should say, to enter a trade. I can literally look at the 4-hour time frame right now, and I may want to enter a long trade, but I'm like, all right, price is currently moving bullish, so I cannot enter a long trade. But if I have a little bit of a pullback, then I can enter a long trade because I'm going to have a better risk to reward ratio. So if I don't like the 4-hour time frame, I may drop down to the 15-minute chart, or maybe even the 5-minute chart, and I'm like, all right, there is my pullback, and it looks like price is about to reverse. So let's enter a long trade. But this is not how it works. You shouldn't be doing that. Okay. So, I feel like, and I truly believe that following those live sessions, you will see how patient I am. And if you can take a little bit of that patience and incorporate it in your trading style, I'm sure this is going to help you a lot. Now, with some of you, the issue might not be patience. It may be that you are scared to pull the trigger, which means you're very patient, but when the time comes, you cannot enter a trade because you're not confident enough. And if that's the case, then there's really a few ways that you can fix that. Now, the most important and probably the most common reason for such an issue would be that you don't have a plan that you trust. You don't have a strategy that you trust. And that means you haven't back tested it or forward tested it. Okay. So I'll get into that in more detail if you want me to. But let's check out let's have a look at price action first. Now, here is euro dollar, and like I said, we are in a bullish trend. I'm only looking to buy it, and I feel like with the help of the news, we're gonna see a confirmation of our idea for long positions on euro dollar. However, like I said, I cannot enter a trade right now. So what can I do in this case? Well, I've already got the Fibonacci on the higher time frame. This is the 4-hour chart, and as you can see, we had a pretty decent test of the 61.8 level. Okay, so if I go down to the 1-hour time frame and I need a pullback in order to enter a trade, I may go for another Fibonacci right here. Now, this one is not confirmed because if price pushes up and it breaks above this high, I would have to grab my Fibonacci tool and adjust it at the new high. But if we're looking at current price action and there is a pullback right now and price does not break above this, but instead of that continues to the downside, where am I going to be looking to enter a trade? Well, I've got the 61.8 right here at 1.1640, and that level actually perfectly fits with the breakout level before that. Okay, the 38.2 as well, around 1.1690, 1.17. Okay, so we have this level right here. As you can see, it has been tested multiple times as well. So this is a really strong level. So what will happen if price comes down around 116.90, 1.17? Well, I'm going to be looking for potential reversal signals. And if I get one of my entry patterns, then I'm probably going to execute a trade at this level. Now, what does that mean? It means that maybe short term, I'm expecting a short move or basically bearish price action. Now, can you trade that? Of course you can if you want to, but you have to consider this as a more risky style of trading. Why? Because you're essentially trading against the main trend. Now, if you want to do that, then you definitely have to backtest your strategy. Well, you have to backtest it anyways, but especially when you're trading against the trend, you have to know your odds, okay? Because when you're going against the big players, you're trying to outsmart the whole market. For me, that never made sense, okay? I was doing it in the beginning, but I didn't know I was trading against the trend, so that's my excuse. But as soon as I learned how to properly read trend and price action signals, I learned that trading against the trend is just a matter of time until you either blow your account or you give up trading, because you're going to have many more losses. Right? It's the same thing with small stop losses. If you are using a small stop loss, again, it's just a matter of time until you give up, because you're going to have more losing positions. Now, with time, you kind of build up that psychology, and if you go through a losing streak, it doesn't bother you that much. But it wouldn't bother you that much only if you know what would be the outcome of your strategy over a long period of time, because then you're confident, and then you can take a trade, and even if you have a losing position, you know that this is just a part of the game. But when you don't have a plan, you may have 3 4 losing positions back to back, and then you're like, all right, maybe I'm not cut out for this. All right. And obviously this is not the right mindset, but it happens with a lot of people because they don't have the guidance. There's nobody to tell them, listen, you have to test your strategy, and you have to know that it gives you positive results over a long period of time, and then you're going to be able to execute that plan with discipline and patience. So anyways, you know, moving on to pound dollar. Now obviously this is not going to be much different than um, euro dollar, but again, overall I'm expecting to see price continuing higher. Maybe there's going to be some pullback, but eventually I'm going to be looking for that bullish price action. However long it takes for that pullback to develop, I wouldn't be trading any short trades within that move. But as soon as we see a good confirmation for a reversal at previous key levels, or Fibonacci levels, because for those of you who have watched our courses, or those of you who are following our free analysis that we share each and every day, you guys know that I love to use the Fibonacci retracement, the Fibonacci expansion tool as well. I feel like these are very, very important tools in trading, especially in technical analysis. But again, what does that mean? It means that on the lower time frame, we may see some bearish price action. But I don't want you to look at one time frame only, because if you look at the 15-minute time frame and you get this, then that means you're in a downtrend. So you're going to be looking for sell positions. Whereas if you pop up to the 4-hour chart, or even the weekly and the daily chart, you will see that the market has actually been moving up. So all you got to do is to spot those corrections, and whenever you have a retracement or a pullback like this, you just have to wait for that pullback to end, and then look for your time to enter a trade in the direction of the main trend. So what I'm going to do right here is, again, I'm going to place the Fibonacci retracement tool based on this most recent bullish move. So short term, I may want to see a pullback. The first level to watch out for will be 1.35. Okay, potentially the next level will be 1.3450. And this is about 50 pips to the downside. So really in this zone is where I would love to see price reacting and giving me a good enough reversal that I can take advantage of a setup like this. Now when it comes to targets, again, uh, even if we're only targeting the previous high, which I feel like price is going to break above, even if we're only targeting 1.3760, we're still going to have a positive risk to reward ratio, because there's something else with waiting for the pullbacks. Okay, so you wait for a pullback, most of the time you're going to get a better, actually all of the time you're going to get better risk to reward ratio on your setup. And especially if you're not using pending orders, because you could be using pending orders, and then you just set up one and then you wait for the market to kind of reverse at your level. But in this case, you cannot really put a tight stop loss, because you never know whether that pullback will actually reverse. Okay, so you will have to use a more conservative stop loss. But when you wait for price action to test your level, and then you wait and see whether there's gonna be a reaction, and then you see that there is actually a reaction there, well then you can place your stop loss just below that reversal, and this is going to save you a lot of pips on your risk to reward ratio, which means you're going to have higher reward for a lower risk, or essentially the same risk but a tighter stop loss. I don't know if that makes sense. I mean, it does, but I don't know at what level you are. So what you can do is you can drop in the chat, how long you've been trading for, and actually where are you from as well. But this is what I'm looking for here on pound dollar. Okay, so ideally maybe the 38.2 level is looking good enough, 1.35. If we manage to come down here, then I would be more than happy to take a trade. as long as I get my confirmation, right? So let's move on to the next one, which is gold. Okay, a lot of people are trading gold, but not a lot of people actually know what the trend is. Okay, so we're obviously in an uptrend. Okay, but because we've been trading kind of sideways for some time now, kind of a, quite a long time actually, a lot of people don't actually know that we're still in an uptrend. So what does that mean? It means we're only looking for buying positions. Now I do like current price levels on gold. We're trading around 3,375, and we actually have a very important level around 3,370. It's not really a single level, okay, a straight line. It's more of a zone down here. So let me kind of do that. So right here, from the level of around 3,360 up to around 3,374, that would be a very easy setup. It could happen, and we may see a reaction and also a reversal at this area, but this is going to be a very simple setup. Why? Because we know we are in an uptrend. All we got to do is we have to wait for price to break above previous structure, come back for a retest, and then continue higher. And this setup is exactly that. Okay, we barely broke above this high, so this setup right here isn't looking good enough. But now we have a clear breakout with this most recent bullish move. Not only that, but we also have the pullback and the retest of that same area. So if we get a nice reversal right here, well, then that could potentially mean for us to look to enter long. When it comes to targets, we're talking about 3,450 and eventually even higher. But we'll have to talk about this once we have a continuation to the upside. For now, we're just observing price action around current price levels for a potential shift in structure. Now, what does shift in structure means? It means that as we're moving bearish, we want to see price shifting that structure. So basically breaking above previous high, okay, creating a higher low, higher than this previous one right here, and then again breaking above this. For me, this is a valid A with this low, B with this high, C with the higher low, and then D pattern with the higher high as well. Right? Once you get something like this, then that probably means the market is about to reverse the direction. Now, this wouldn't be relevant if you're looking, let's say, for that setup on the 4-hour time frame, and then you drop down to the 1-minute chart and you're like, okay, I'm going to be waiting for an ABCD pattern, right? Something like this. Well, that whole move on the 1-minute time frame is just a tiny bit of the whole move on the 4-hour chart. So if you have a shift in pattern in market structure right here on the 1-minute time frame, and then you look at the 4-hour time frame, price is going to be exactly the same levels. Okay, it wouldn't have moved that much, or maybe slightly higher, but still you're going to be looking at the same candle. Okay, so if you're looking for your setups on the 4-hour time frame, maybe you can drop down to the 30-minute chart, but I would suggest sticking to 1 or 2 time frames below the one that you're trading on, or below the one that you found the setup on. But if I have to be honest, I think gold is currently looking best out of all those pairs that we usually look at during the live session. We also have Euro Yen and Pound Yen, and this is something that we talked about in the premium channel a couple of hours ago. Now, we've got some very interesting setups here on the yen cross pairs. The thing is, let's start off with Euro Yen. The thing is that I'm expecting a bullish continuation. Okay, we have a very clear and well-defined trend, right? But we need some sort of a price action that confirms that this trend will continue, because right now we're not actually creating higher highs. So the thing is, we're currently trading sideways, but every time we drop down to the 38.2, we have a strong reaction, as you can see right here with this low and this previous low as well. So we dropped to that level and then we quickly recover. Same thing happened twice already. So what will happen if we drop a third time? Are we going to actually break below that, or again we're going to reverse at the same level? Now, what we said in the premium channel earlier today was that whenever you're looking for setups like this, it's best to not not use the same amount of risk that you would use when you have a perfect setup according to your plan. I know that sounds very obvious, but trust me, not a lot of people do that. Okay, why? Because they're rushing. They're rushing into their trades and they're expecting that they're going to make a lot of money in a short period of time. If this is your mindset, you have to change it immediately, because that's not how it works. Why? Because you're going to have a 1% risk on this trade, okay, because you think that price will again reverse at the same level, but then you get taken out. Now price gives you another confirmation, okay, it gives you the ABCD pattern. So now you just risk 1%, you want to make it back, you either risk 1% again, or even worse, you maybe increase the risk so you can make up for the loss quicker, but then price takes you out again. Now you're 2 or 3% down on your account. Now you get another confirmation. At this point, you're like, all right, so we've got 1, 2, 3, 4 rejections already. Price must definitely be going to the upside. So now you risk again 1, 2, or even worse, even a higher percentage. Okay, but then you get taken out again, and then eventually price goes in your favor. All right. So on one setup, just because you were impatient and you made loads of mistakes when it comes to money management, you may have lost at this point 5-6%. Okay, and then you don't want to take the next trade because you're already in a drawdown, you're not happy with your results, you're frustrated, the market bounces off again off of the same level, you're like, all right, I'm not taking this entry, but this time the market keeps going up, leaving you behind. Now, these are the worst setups, and I'm sure most of you guys have experienced the same thing. It's part of trading, but this is why, because you cannot control price, you can actually control how you react to price action signals and how much you risk on each trade. So that's why money management is the most important thing in trading, and then obviously psychology as well. I actually forgot to do a sound check, so I have to do it right now. Forgot to do a sound check, so I have to do it right now. Okay, I'm not sure. I think I think there's a little bit of echo. I'm not sure. I think there's a little bit of echo. So let me try it this way. I'm trying to fix my mic right now. Let me try it this way. I'm trying to fix my mic right now. Well, I'm not sure if that's better, but you guys let me know if you can actually hear me all right. Because I'm on mute, you know, I've got the stream running on my other screen just to make sure everything is running smoothly, but I'm on mute, so I cannot hear, you know, my voice, so don't get confused. But you guys let me know if everything is fine. So anyways, yes, 24th of July, we've got the ECB news. Let me just open up the economic calendar. Somebody asked me which calendar I use. I'm kind of used to the fxtrade.com one. You know, I'm not affiliated or related to them at all. It's a free feature that they have on their website, and I'm just kind of, you know, used to using this type of calendar right here, because I can go to filter, I can remove the low and medium impact news, and I'm only going to leave the high impact news, and also none, because that shows you um, whenever there is a day off for a certain central bank. So let's say on 4th of July, it will show you that it's 4th of July and the US market is off. And it's always good to know that, because obviously whenever there's no liquidity, there's higher spreads, there's not a lot of movement in the market. It's not the best time to enter positions. But anyways, here's Thursday, 24th of July. We've got the news at 1:15 London time, okay, and also at 1:45, quarter to 2 again p.m. London time. This is where we get the ECB press conference. So maybe we're not going to have that much of a movement during the interest rates. As you can see, there are no changes expected. But during the press conference, we may have some more movement there, depending on what they talk about and what they comment. Later on today, we have some news for the US dollar as well. But again, just like with the ECB news, I'm really not expecting that much of a movement. And then tomorrow, Friday, not much going on really. So if you have any positions, obviously you can keep them open. But if you are going to be looking to enter a trade on Friday and it's not a day trading setup, meaning that you're going to close the trade by the end of the trading session or by the end of the trading day, you've got to decide whether you want to keep your trades open overnight. Obviously, if you're trading on the lower time frames, it doesn't make a lot of sense. You have tight stop losses, so probably not a good idea. But if, like myself, you're looking for setups on the higher time frames and you have a really good entry on Friday, you enter a trade and the trade goes in your way, but the market is about to close, I would always recommend to leave that trade open. But of course, that must be a specific rule, separate rule in your trading plan. So you've got to decide for yourself how you want to do that. So what do we have? Pretty much long bias on all of those instruments: euro dollar, pound dollar, gold, euro yen, and pound yen. But I wanted to, still go through those instruments because, like I said, even though I have a bullish bias, if there is a pullback, I'm just going to have to wait for that pullback to end. And just because there is a pullback of, let's say, 30, 40, 50 pips, and then we go up, it doesn't mean that the analysis was wrong. I'm telling you what is the overall direction and where we're eventually going to see price going. Now, I'm not saying it's going to happen right now, maybe not even today. We never know. But all we got to do is to observe price action and, kind of react accordingly without risking too much of our capital. Do we have any other trading opportunities apart from those instruments? There are some potential setups forming up on the rest of the cross pairs, but I'm not going to go through those because I really don't like those setups. Something else that recently happened is that Aussie dollar actually broke above its current highs at the 4-hour chart. And you can see that we're now trading around 0.66, 0.6610. which is above those previous highs. Most likely we're going to see that continuation even higher. Before that, though, again, first of all, we are currently reacting. Well, this Fibonacci must be adjusted a little bit, but I'm looking for that continuation higher together with the majors. But since I am expecting a pullback on euro dollar and pound dollar as well, there's probably going to be one on Aussie dollar. And ideally, we want to see break and retest. This is a pair that I do not trade, but I know there's a lot of people that trade Aussie dollar. So, uh, you know, this is why I'm sharing it. It's been just over half an hour since the live stream started. Not much of a movement. I'm not surprised about the euro with the news coming up later. I do want to see sharp reaction here on gold. That would kind of confirm the idea for a potential move towards the upside. But for now, we ain't got nothing. And this is the perfect time for you guys to ask your questions. If there is something that you struggle with, maybe let me know what kind of setups you're taking. If you currently have any trades, if you don't mind, you can also share a screenshot and I can check it out right here on my screen. I'm interested to know whether there's somebody holding a long position on euro dollar or pound dollar. Did somebody manage to enter a trade down here at the lows? Here is euro dollar and this is the pound dollar. Did someone manage to get into a long trade? Because I would have imagined most people would be looking for short positions because this is what they see, but they don't see what happened before that. Right? We have this bullish move, and that's why I'm saying using multiple time frames. It's very, very important. You guys, anybody who's asking about the volatility trading expert advisor, I do mention this every time we have a live session, but you know, if you are interested, it's the trendlineforex.com website, and you can check out this page. I'm going to drop it in the chat right now. The volatility trading system, you can learn more about it right here. You can check out some videos, some verified results from my FX book on accounts that only use the volatility trading expert advisor. Okay, and you can check out all the information on this page, and you can also watch a completely free course. It's free of charge. All you got to do is to register on our website, and then you go to courses, and it will show up right here. Right now it's not loading on my page, but you will see it. But you know, make sure to check it out. It's a very interesting tool, and also my most recent videos on YouTube, apart from the live sessions, are showing results with the VTS, how it works, you know, on 3 separate accounts, because you know, we are currently running it on euro dollar, on pound dollar, and also on gold as well. Now, in a market like this, the expert advisor really does the best job, because the market is trading around the same levels. Every time it goes down, you know, you're loading up buy positions, and then as it goes up, it closes all of those trades right here, and it brings you profit. It generates profit. Then you have this drop, and you have buy positions, you know, multiple buy positions right here within this move. And then as you can see, the price comes back to the previous highs. Now all of those sell positions have now been closed in profit. So you know, you are essentially at the same levels. Okay, the market hasn't moved that much, hasn't broken above or below previous structure. It's basically trading sideways, but you're generating profit. Okay, the next time it goes to the downside again, it starts loading up buy positions right here, and as you can see, we come back to collect all of the take profits within this move. Okay, now again, we're still trading within the bigger zone. We haven't really moved anywhere else, and while we're trading right here within this area, we're generating profit. This is how the expert advisor works. It's not a fully automated algorithm. The idea is that you have your own analysis, and then you, instead of you making the entries manually, you let the expert advisor run the trades for you. But the idea and the analysis and how to set up the expert advisor comes from you. So that's why a lot of people who want to use the volatility trading expert advisor, they actually go for the premium channel as well. This is where each and every day I'm sending out daily video analysis, about a 10-minute long video every single day before the London market opens, telling you what is the market direction on multiple instruments. Okay, so that means as soon as you open up the chart, if you see price action like this and you don't know where the market is going to go next, you know, you're going to get notified in that video. I will tell you what is the market direction on most of the instruments that we have on our watch list, about 20 instruments right here. Okay, so if for example you're only trading euro dollar or maybe pound dollar, I will join in the morning, send you the video, and in that video you will see me saying, all right, here is what's going on with pound dollar. You know, all you need to know for today or for the few days ahead is that we have a key level, for example, right here. We may see a pullback, but overall we're going to see a continuation to you know, to a higher level. What does that mean? It means that you now open up the chart and you know what to do. You've watched the video, you're like, all right, I'm only looking for buying positions then. And so you know how to set up the expert advisor. You tell the expert advisor, I want you to open 100 buy positions as the market is going down. Okay, I'm going to place my stop loss, let's say all the way down here. And within this move, or maybe even within this whole area, if price is going down or trading sideways, I want you to trade instead of me. And this is exactly what the expert advisor will actually do. And obviously you can clearly see from my last videos that we've had amazing results using the volatility expert advisor. Now this is not one of those EAs which is going to blow your account in a couple of weeks time. It's going to double or triple your account and then you're going to lose it. Of course that could happen if you don't know what you're doing, if you're not calculating risk, if you're not managing your trades. If you don't do any of that, then you're most likely going to blow your account anyway, whether with or without the expert advisor. But if you know how to calculate risk, and of course we're going to give you a calculator for that, if you know how to manage your emotions and manage your trades and not go through a lot of stress when trading, if all of that you've taken care of, well then you're going to have amazing results with the expert advisor, because it will allow you to trade in a way that you wouldn't be able to otherwise, because if you're trading manually only, you are limited. It's not like this with the expert advisor, because you can spread out your risk in multiple trades, and you're eventually going to average your price. So in that case, it means that you don't even need to know a particular level where price will react, because with the expert advisor we're not looking at a particular level, we're looking at the whole zone, because we're trading from that area. We're going to have positions all the way from the top to the bottom of this area, so we don't really need to know exact level where the market is going to reverse. And of course when it comes to technical analysis, this is the hardest part, picking the right level and then the market answering to that level, because in many cases you're going to have a level, but the market will easily smash through that level, maybe then come back. But right here you are in a drawdown. Now imagine this: you have this level, so you decide to enter a long trade and you're trading manually, right? So what happens when price comes down here and it starts forming up a range below your entry? Throughout that whole time you're actually in the negative, okay? But when you're using the volatility expert advisor, you started your entries, let's say up here, or maybe down here, or maybe even up here, and then the market drops below your entry or multiple entries and it starts trading like this. Now what the expert advisor will do is it will generate profit within this sideways move, and by the time it breaks above or below, you may have generated more profit than you have open positions in negative. So that means you have the flexibility to now choose whether you want to close that trade and actually be in profit even though price is trading below your entry, or you may decide to leave it, because if you're very confident and your analysis says that price will continue to the upside, that means that eventually we're going to break above. And if you're entering long positions, why not generate profit right here, but also generate profit on the way up, right? And whenever you pick a zone with the expert advisor, you can actually set the expert advisor to actually move this zone as price is moving, right? So let's say down here you have an area where you want to start loading up buy positions. Price comes right here, starts loading up buy positions, but then it makes a strong move to the upside. Now you can set up fully automatically for this zone to move like this, because maybe you're now expecting a higher low, okay? And so once you catch a few setups like this, trust me, you're going to have amazing results. Again, for those of you who are interested, make sure to check out the link that I just sent in the chat box. Have a look at those videos. I also have a webinar, full webinar on this, and I've got the recording in our YouTube channel. It's called Volatility Trading System, The Money Never Sleeps. Why? Because you can put this expert advisor on a VPS and it will work even when your computer is off, okay? Even if you have to travel or you have to go to work and you cannot look at your computer and you cannot let your computer or let the bot run because you have to switch off your computer, well then, you know, there is a solution for that as well. All you got to do is just to put it on a VPS. It costs like $5 to $10 every month. It's basically nothing. And the expert advisor will run even if your computer is off. Of course, you know, us at Trendline Forex, we always help, you know, our people to set up everything correctly. It looks like we're now forming up a higher low, and we're also breaking above this minor structure. Now, if there's going to be, let's say, another bearish candle and then a nice engulfing bullish, or, you know, just like this one right here, maybe I should zoom in. So we have a low, then we have a move up, we have a little bit of a correction, a higher low, and a strong engulfing candle. Little bit of a correction, a higher low, and a strong engulfing candle. So now if we see the same thing again, that probably means we're going to see even more momentum building up as price is going up, right? So not a lot of movement. Wait for the ECB news if you are going to be trading up there, including the euro. If not, we do have some nice opportunities here on gold, okay, on the pound yen pair as well. I think I'm going to be ending the session right about now. You guys don't forget to check out the links in the description below this stream. Join the free Telegram channel. All right, we've got over 3,000 members. This is where we send out a lot of information every day. It's not spam. It's not actually a lot of information. It's just the important information that we send. And we also have a premium Telegram channel for those of you who want to become really good at trading, start making some consistent income, whether that's full-time or part-time income. I think the premium Telegram channel is the right place for you. We don't send signals. This is not a signal group. Instead of that, you know, I send you a quick 10-minute video analysis every single day, and I talk about euro dollar, pound dollar, Aussie dollar, dollar yen, the yen cross pairs, euro pound, euro Aussie, gold, Bitcoin, Ethereum in that 10-minute short video. Now, why? Because like I said, I'm only giving you the most important things you need to know for the day ahead. So for example, I would say, all right, listen, even though we are in a bullish trend, we may have a pullback here, so be careful. Do not look for entries right now, but wait for entries around this level, okay? Then I'm not going to send a signal, enter a trade now once price hits that level, but you know what you need to look for. So now you have the chance to build up your strategy around those analysis. And this is definitely going to improve your trading and win rate by a lot. Okay, so this is what we do in the premium Telegram channel every day from Monday to Friday. Whenever the market is open, we send out a video like this before the London session starts. And even if you're in a different time zone and the London session is not relevant to you, well, the videos are going to be. So make sure to join the premium Telegram channel. You know, you can send me a quick message via Telegram. You know, you can join the free Telegram, and this is where you will find a button below pretty much every post where it will say private message or something like this. This is where you can chat with me. So make sure to send me your questions if you have any, but don't, you know, miss that opportunity. Join the premium Telegram channel, see how it is, and you know, trust me, you're gonna be uh, totally happy with what you get as value in the premium Telegram. And also, for those of you who are struggling with building up a strategy, or maybe struggling with psychology, with patience, struggling with finding the capital, check out our website, trendlineforex.com. We've got around 20 courses. Some of them are completely free. We also have a blog article section, and each one of those articles is completely for free, written by me and our team at Trendline Forex. Again, a lot of free information for you guys. You have no excuse as to, why not to progress in trading. And again, if you're in the very beginning and you're not sure about the premium Telegram channel, go through all of the free information that we have on our website, trendlineforex.com. Check out all of that free information. If you're happy with it, let's chat, let's talk, or just opt in for one of our paid courses, paid programs, or the premium Telegram channel. But do that only after you've watched all of the free content. It's going to take you some time, definitely. Also, don't forget to subscribe to this channel. There's going to be more live sessions. So this is the last one for this week. It is Thursday, so the next one is going to be on Tuesday, and then again on Thursday we may do some US live sessions. And whenever we've got good opportunities like we have today and like we had in the previous sessions, I will always share them with you. All I need you to do is, even if you're not taking those trades, then just follow price action, see how our analysis plays out. Because recently it's been really, really good. So without wasting any more time, I think that's all for now. I can see there are no questions at the moment, but like I said, you can always reach out to me at any point, and I'll be happy to help you out, guys. I'll see you in the next one.